Hey guys, welcome back to another video. So it is Thursday, so it's time for another market update to see what is happening, especially after I received an email from one of the folks from the channel, from our community, saying that one of the brokers said that yes, the market is going to start improving for carriers. He has seen rates go up in certain areas. So let's go ahead and see what happened as of last week, what's happening this week. Of course, last week was a holiday week, which usually means that capacity temporarily leaves, but so do loads. So yeah, let's check it out. Ready? Let's go. Okay, starting with the net change in authorities, and we lost the largest amount of carriers net since I started counting it this way since week 27. The current net change in carrier authorities as of last week is we lost 570 carriers net. How did this happen? Well, let's take a look at the more granular data. And what you can see is that even though the total loss, the green line, didn't really change much week over week, the total amount of carriers that opened up an authority as of last week decreased quite a bit. All right, let's take a look at what's happening with that ELP data, which is available up to November 28th so far. These are out of service orders. And as you can see, it's kind of in line with August and July, quite a bit lower than September and October. If we take a look at the out of service map for English language proficiency, Arkansas is on first place, Texas is on second place. This is just for the month of November. California is at 0, Minnesota is at 0, West Virginia, no, it's at 5. So yeah, California and Minnesota are at 0 for the month of November. All right, let's take a look at what's happening with diesel prices. Thankfully, it looks like diesel prices did go down again week over week by about 4.4 cents per gallon. They're still 5.5 almost cents per gallon higher than last month and 19.3 cents higher than last year. All right, let's take a look at the diesel maps. This is last week. This is this week. This is the price at the pump. It did get a little bit lighter. California is still the most expensive place. The most affordable place is Texas, $3.21 on average at the pump. Now, if we take a look at the diesel prices without IFTA, this is last week, this is this week, and Texas is the cheapest, $3.01 minus IFTA. The most expensive is Washington, and followed by Oregon. Washington is at $4.33. Oregon is at $4.31 per gallon. Now let's take a look at what happened to rates last week. That was a holiday week, and what you will see is look at those dry vans go. So last week, dry vans went up to $2.12 per mile on average on the spot market. This is after, I mean, how long have we seen dry vans at $1.90 something? For a very long time, but they did spike up. Reefer rates actually went down last week, and flatbed rates, they stayed more or less the same. All right, let's take a look at the overview. What is going on this week on the spot market? So for dry vans, the highest recorded average rate per mile came from Michigan, $2.62. Lowest from Montana, $1.42. Highest volume is Texas. Rhode Island is at the lowest volume, and Texas is the most versatile. Once again, just like last week, Rhode Island has the lowest volume for the three main equipment types. For reefers, the highest recorded rate per mile posted on the spot market was Kentucky, $4.34. Lowest was Delaware. Highest volume in Texas, lowest is Rhode Island, and the most versatile state this week is Illinois for reefers. For flatbeds, the highest rate per mile is Kansas, $4.49, or the highest recorded rate per mile. By the way, again, this doesn't mean that these are good places to be. We'll look at that later. Lowest rate per mile, Connecticut. Texas has the highest volume. Rhode Island has the lowest, and Texas was the most versatile. All right, now let's take a look at what is happening with those loads, trucks, and rates per mile for each of the equipment types, starting with reefers. Loads, as always, mostly come out of Texas, also Illinois. California is actually not as bright this week as usual. Trucks mostly go to California, Texas, and Florida. Illinois, Pennsylvania, and Georgia as well. Rate per mile map, what is going on? The most versatile state was Illinois for reefers this week, and we can see the average rate per mile is actually not bad, $2.96, with the highest rates going to the Midwest, Minnesota, Iowa, Missouri, etc., and the lowest rates going to the West Coast. $1.75. What is happening with the market compared to last week for reefers? And this will also help us figure out what the best places to go are. So as you can see, surprisingly, for reefers, all regions saw a decrease in the average rate per mile posted on the spot market. It's all red. However, 4 out of the 5 regions, with the exception of the Western region, saw an increase in volume for reefers. And this is compared to last week. The best place to stay in is, as always, the Midwest, because the rate per mile is higher and the load volume is higher for reefers there. Okay, let's take a look at what is happening with those dry vans. Most loads come out of Texas, some of the Midwest, California, Georgia, and the trucks, they end up going to Texas mostly. Now, in terms of the rate per mile map, a lot of dark orange here, meaning the darker it is, the higher the average rate per mile posted is. But the most versatile state was Texas, I believe. So for Texas, the average rate per mile was $1.91, with the highest rate per mile going to the Plain States, $2.63, and the lowest going to the West Coast. Now, if we take a look at a place like, I don't know, let's take a look at Wisconsin. It's also versatile. The reason it's not as versatile as Texas is because Wisconsin has less loads, but the rate per mile is better. As you can see, it pays on average $2.55. Let's take a look. Illinois on average, $2.43. Indiana on average, $2.27. Michigan, $2.62. So clearly the Midwest is a pretty interesting place for dry vans at the moment. And if we take a look, interesting enough, 3 out of the 5 regions saw an increase in the average posted rate per mile, including the Midwest. The only 2 that saw a decrease were the Northeast and the Plain States. And 4 out of the 5 regions, with the exception of the West Coast, saw an increase in the load volume. And as always, the Midwest is still the place which has a higher rate per mile and a higher load volume for dry vans. Okay, last but not least, let's take a look at what's happening with those flatbeds. Now, on the flatbed front, loads mostly come out of Texas and the South in general. Trucks mostly go to Texas. I don't even know why I showed this map, but when you play around with it, you see just how many loads, so I'll just keep it, but it never really changes. Rate per mile map, yeah, it has a lot of blank spots. Now, Texas, I believe, is the most versatile this week, $2.25 on average. The lowest rate per mile is to the Midwest, $1.84, and the highest is, of course, to the Plain States. Just out of curiosity, let's take a look at a place like Alabama, $2.37 on average, Mississippi, $2.27, Arkansas, $2.68 on average, although nothing went to the West Coast from Arkansas that I saw this week with a posted rate. So yeah, play around with this map and this will help you understand what's going on in the market. Let's take a look at the overview. Interesting, for flatbeds, actually, 4 out of the 5 regions saw some kind of increase in the average posted rate per mile, with the exception of the Northeast, which fell by about 3 cents per mile. Now, 2 out of the 5 regions, the Midwest and Northeast, saw an increase in the volume. All the other places, the regions, saw a decrease. The best area to be for flatbeds, yeah, it's still the southern area. First of all, look at the rate. The average rate this week from the south was $3.44 per mile. Of course, this includes short runs. And even though the volume dropped quite a bit from the southern region, from 12,500 to just under 10,000 loads, it's still the highest load volume, which gives you something to choose from. So what are people saying about this market currently? Well, people are saying several different things. Number one, I saw a comment, and Craig Fuller confirmed this as well, that after the holidays is when capacity starts, at least the number of MCs start dropping like crazy. I don't know why it happens after the holidays, especially after the end of the year. Maybe it's a psychological thing, like I'll work until the end of the year and then I'm done. But this is something to look out for in the next few weeks. Number two, in terms of negotiation with brokers, goes the following way. At least this week, this is what I noticed. A rate is posted. Let's say $1,500 is posted on the load board. You call on the load and say, I need $1,700 on this load. They say no, $1,500 is our best. So then you are like, okay, thank you very much. Anyway, I appreciate the information, but I'll move on from this load because I need 17. Then about 30 minutes later, that same broker either calls you or emails you and says, okay, fine, I'll do 1700. This is what the negotiation looked like this week, at least in our case. So basically at first it's a hard no. That's the maximum rate. And then they end up going up in price, not always meeting you at the price you asked, but going up in price nonetheless. Curious to hear how, first of all, how your Thanksgiving was, how the market was last week, and also how it's going this week. Is it a little bit better than last week? Definitely less panic, I would say, because of course, when there is a holiday, everyone panic books everything as soon as possible and the load volumes disappear. So yeah, would be curious to hear your thoughts. Anyway, thank you so much for joining and watching. Wishing you all a fantastic rest of your Thursday. I still have so much to share with you guys because my goodness, I just cannot keep up with everything as of late. So yeah, bear with me while I try to get myself organized. Anyway, guys, thank you so much for watching again, and I'll see you in the next video. Bye.